Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. For this week, we'll be analyzing the markets as they closed on the 27th of April 2018, and as is usual, we're going to be starting off with the S&P 500 E-mini futures market. So this past week, we once again witnessed this market pretty much consolidating and going sideways. We had the market pretty much close where it had opened on Monday. Last week, when we were analyzing this market, we'd been primarily talking about this midterm support and resistance level, where we've had a very solid indication of support and multiple moments where price basically found resistance at this level. We also had this entire consolidation period, a very tight consolidation period just underneath this level. And we had talked about how price, now that it had broken past this horizontal support and resistance area, and that it was pulling back to it, we had talked about how we were anticipating for price to hold as support here and continue higher for more bullish momentum to sort of build up on this market. We did not see that pan out, of course. We actually had price pulling right back down underneath the level, although it was very hard for obvious reasons for sellers to just continue to dominate. We had a lot of congestion and traffic towards the left here underneath the this 2670-ish horizontal support and resistance level, and so definitely we saw buyers come in once again. And on Friday, we actually closed right back above this horizontal support and resistance area. So although we do have buyers in control here, the market is still sort of consolidating for the most part. We're once again also looking at all of these higher lows and the lower highs starting to come into the market here, indicating that the market is really just tightening up. We could also throw in these trend lines, rising and descending trend lines, to really create a wedge pattern formation for this market. And you can see the market is really just consolidating and probably tightening underneath this wedge pattern formation, all of which obviously indicates to the possibility of an eventual breakout, either towards the upside or the downside, past this wedge pattern formation. We're going to be waiting for symptoms and indications and evidence for the market to do something like that. For now, we're just continuing to see a more sideways movement, and really just no party, either the buyers or the sellers, dominate the market for too long at all. As of this week, the fact that price is right back above the 2670 level creates an interesting scenario, because if price is able to now hold its support again at the 2670 level, the buyers could actually be able to propel price further up. Of course, there's this more immediate swing high that the buyers will have to battle against, and if we're able to make it past that level, we could just further climb towards a more important swing highs and price levels just underneath and at the 2800 level here. Although, again, that really just remains to be seen and will depend on a lot on how the 2670 level holds or does not hold. Again, if it fails to hold a support and just comes in as resistance again, we could see price once again just doing a lot of up and down consolidation movement and oscillating around the 2670 horizontal support and resistance level. So just for a market that's caught up in a more broad consolidation phase, it's just hard to predict any kind of definitive and strong movement in one direction. And so naturally, we're just talking about this market in terms of weak probabilities and just faint chances of the price either holding or not holding at horizontal support and resistance levels and past major and minor swing highs and swing lows. Okay, so the next market we're going to be looking at here is the light crude oil futures market. Now, this was an interesting market to follow last week, not because we saw a major move in our anticipated direction, but more because we didn't. We've been talking about how this market has actually just broken past the major 66 round number. We've had multiple indications of very obvious resistance at this level in the past. We did see price kind of break above it, pull back to it. We had a quick initial pullback to the 6600 level, and after that we just witnessed a very sharp bullish candlestick towards the upside, possibly indicating at a breakout above the 6600 level and the resumption of this more longer term downtrend. And going by all of that development, we were really hoping for some more solid bullish activity for this market in the past week. We didn't actually see any of that at all. Price actually just pretty much consolidated, and we were going sideways for the bulk of the week, so much so that we really didn't even create a new major swing high for this market in the past week. And that really indicates one of two things. Either the bullish momentum here is weakening to the point where price is probably looking for another pullback to the 6600, or this entire breakout that we've witnessed above the 6600 level is possibly just a fake breakout, and price will probably go right back down underneath and close strongly below the 6600 level, in which case we will just have this more recent sideways consolidation phase continue and just meander for a little bit longer. Of course, in that case, this rising support trend line will become very important, in the sense that if we see a break underneath this rising support trend line, we could actually then have a very strong development and a very strong case for sellers to come to the market and dominate this market for a while, because then we not only will have all of the consolidation that we had within the wedge pattern formation, we'll also have the momentum that this fake breakout will lend the sellers in that case. But all of that really just remains to be seen, and of course a lot will depend on whether the 6600 level will hold as support as and when price basically pulls back to it. On the other hand, of course, we could just continue to see more buying come to the market straight away this week because as it is, price has broken past the 6600 level as the market stands, and really that could just mean that our initial analysis of this market, where we're really just believing for the resumption of this more longer term uptrend, will just continue to be the case for this market. But just the lack of bullish activity in the past week has really caught us watching this market very carefully now, because if this were to be a very true breakout, we would definitely be seeing a lot more strong bullish activity, like the kind of activity we saw when price basically initially broke out of the 6600 level. So the lack of that strong momentum from the buyers here is definitely a sign of a concern for traders and analysts looking for this market to resume its uptrend. Whether it's a concern that will actually transpire into a real world problem for buyers here just remains to be seen, and like we said, will depend for the most part on the strength of the 6600 level and whether it continues to hold a support for this market and allow price to propel further north. Okay, so the next market we're going to be looking at here is the gold commodity futures market. Another interesting market to follow last week. We've been talking about the 1350 major resistance level for this market and a key support zone at the 1300 major round number. That's basically holding price up and creating a channel for the market to consolidate and be indecisive in. More recently, we've had multiple tests of the 1350 resistance level, and each time price has not been able to break past it. In fact, here we had a very strong fake out play at the 1350 resistance level. We saw buyers really try to push price past the 1350 level, fail miserably, and sellers just able to dominate once again, allowing prices to once again go back within the channel. We then had a quick pullback to the 1350 level once again, and sellers since then have been rather dominating this market. This past week was no different. We did see some buying come in at some prior levels here, which is typical of a sideways consolidating market. But for the most part, we were impressed by the selling that we saw this market post this past week, which really just allows price to inch closer and closer towards the 1300 round number support level here, which is very important for this market. If you stretch it back, it actually goes way back. We've had multiple indications of resistance and support at this level for several months in the past that the market has overall been consolidating, and so price returning back to that level will definitely make things a lot more interesting for this market. Our initial long-term view or mid to long-term view for this market continues to hold, which is that unless price really breaks past either of these two levels, we're just anticipating for this market to continue to consolidate and be majorly indecisive. Although this recent strong selling coming to the market is a refreshing sign, and if we do actually this week or in the coming weeks see price eventually drag down to the 1300 level, like we said, it will definitely make things interesting, and a break underneath this level should then make for an interesting development for this market, in the sense that we could then see a more definitive move in that case towards the downside, where then we'll have all of these levels come into play. We have this more this sort of a minor swing high over here. We have this support level over here, and of course this all important swing low right down here. All these levels will then come into play, and depending on that breakout and the force that the sellers are able to generate off the breakout of the 1300 level, we could see either of these levels really come into play. Okay, so the next market we're going to be looking at here is the Euro currency futures market, which was also one of the more interesting markets to follow last week. And that's precisely because we saw this market kind of breaking out underneath this wedge pattern formation and this rather extended consolidation phase that we had been witnessing for this market over the past few weeks. So for this market, we'd actually analyzed last week that we would have actually favored a breakout towards the upside, which would have been more in line with the longer term uptrend that we've witnessed for this market, and also prime the market for a climb further up to more important longer term horizontal support and resistance levels. However, that scenario didn't really pan out. We actually saw sellers break past this rising support trend line and this pattern formation over here. And although we didn't really have a pullback to this support level and towards this pattern, either an initial pullback or even an extended pullback, the sellers really were just able to dominate the market pretty much for the most part last week. But it also sort of bounced off that 1.21 important level on Friday. We had talked about this level and how on the flip side case where price had actually broken underneath the rising support trend line, we had anticipated that it would then possibly run into trouble from some former resistance levels at the 1.21 level. Of course, this was a very, very important swing high. We had 3 candlestick highs touching precisely at the 1.21 level, which created a very formidable resistance area over here. We had anticipated and feared that this might just turn into support for the market and create major obstacle for sellers, and that's precisely what we're witnessing here right now. Although we don't have a very dominant looking bullish pin bar here, we definitely do have an indication of some buying coming to the market at the 1.21 level. Again, that shouldn't really come off as a surprise to an informed technical trader at all, who's looking at this 1.21 former resistance level and the possibility of it turning into support. Whether price will actually be able to completely rebound off the 1.21 level, or this is really just a hold up where the sellers will probably consolidate for a while before eventually breaking further down, that really just remains to be seen. But the breakout that we've seen here is strong in the sense that we didn't even bother to pull back to test the rising support trend line and this wedge pattern formation here, and that tells us that that the momentum here is definitely with the sellers right now. Even though we did see a bounce of the 1.21 level, the pin bar here isn't really that strong, and we wouldn't be too worried about it just yet. So really, all the signs here point towards some major selling momentum for this market. And really, if we in the early part of the week are able to break underneath the 1.21 level, that could then just really pave way for more selling and lower price levels for this market this week and in the weeks to follow. Okay, so finally we look at the 10-year Treasury note futures market, which over the past week spent most of the time consolidating. We had the first part of the week where we saw some selling come in to continue with the momentum that we had built up in the week prior to last one, and later on in the latter half of the week, we saw some buying come back into the market, indicating towards a possible pullback back to the 120 major round number the price had earlier broken out of. We had talked about this possible scenario in our analysis of this market last week. We had talked about how we have had a very strong looking breakout past the 120 round number, but that we really didn't have a pullback at all to this level, either an initial pullback or an extended pullback. And it seems like we could be getting an extended delayed pullback now as the market just continues to trickle back higher. If this momentum just continues and we're able to see in the early part of this week price continue to make its way higher up towards the 120 level, we could then get the test, the much needed test of the 120 major round number, which will then again be a decisive moment for this market. If the 120 round number does not hold as resistance, which would be former support turning into resistance, we could then see price really just trickle back up above the 120 level, which could open the scenario book for multiple different developments for this market. We could see the market just continue to consolidate once again above the 120 level, or we could see a possible reversal or a more extended move towards the upside past the 120 major round number. On the other hand, if the 120 level does hold as resistance, which will also be our anticipation and our expectation from this market, just given the fact that overall we've had a very strong move towards the downside for this market over the longer term period. We've had major consolidation at the 120 round number and a more rapid and a more sustained breakout past the 120 round number as the market stands right now. It just favors a move back towards the downside for this market. So we're anticipating some resistance to come in at the 120 round number, possibly enough to allow for sellers to regain the momentum that they need and allow price to move further down towards lower price levels.